There is one trading strategy that I use every single day to make consistent profits in the markets. It's a simple mechanical strategy that doesn't require any daily buys or indicators. It's designed to take all the guesswork out of your trading so you gain your freedom back. My name is Islam and this is not a Siri. This is a mechanical system I was forced to build to escape my demanding 9-to-5 job at the Big Four. It's a strategy that made me a six-figure funded trader and gave me my freedom back. So in this video, I'm going to give you a complete system. I will break down 3 simple steps for this strategy. How to identify the setup within the first 2 hours of the market open, how to execute a perfect entry, and 3, where to exactly place your take profit and stop loss. So make sure to stick till the end. But before I tell you more about these 3 steps, you have to understand the simple but powerful concept that this strategy was built on. Most of the traders look only at price, but the pros, the most professional traders, know that the best movements of the price happen at specific time. In the past, I used to spend a lot of time in front of the charts, like staring at charts for a whole day long, thinking that more time in front of the charts equals to more money made. But the reality was different. More time I spent in front of the charts, more trades I took, all of that led to more mistakes I did and more losses. Most of the traders blame their impatience and lack of discipline for this. But the real reason is that they don't know when actually their high probability setups occur. After years of backtesting and forward testing, I found that 85% of all high probability trades happen only during the first 2 hours of the London and New York sessions. By focusing only on these windows, I dramatically improved my win rate and eliminated all of those impulsive trades I took before. So the solution to trade like this was to anchor your trading to what I call Asian session or the origin point. This concept is powerful because it's 100% mechanical. It's the same for me, for you, and for anyone else. Simply, there's no room for subjectivity in this strategy, so all of your analysis and trades become objective and consistent. So here's the first step. You have to open the trading view in any pair on the 15-minute time frame. Then go to the indicators tab and add the sessions on chart indicator. We are interested in the first 4 hours of the Asian session, so here you can see the settings for the indicator. This vertical gray stripe represents the first 4 hours of the Tokyo session, so all you need is to draw the high and the low of the price action that happens during those 4 hours. This is literally going to be your map for your entire day. So now we are set up and ready to hunt for our entries. So now you do have your map, but the next question comes is not less important. It's how do you actually enter your trade? Most of the traders are literally going to gamble on random breakouts, but we do have a system here. Here you have to understand that trading only one pattern is not going to work. Most of the traders fail because they use only one strategy to trade all the market conditions. A trend following strategy is going to fail during the range, and the range trading strategy is going to fail during the trendy days. To be a successful trader, you need a distinct trading models for each market condition. My full system has a models for trading the trendy days, for trading the rangy days, and for trading the high volatility days when the price is just spiking up and down. But today we are going to master my favorite one, the breakout and retest model. This model is designed to trade and catch the beginning of the new directional and strong move after some period of consolidation. It has 3 simple components. First is the breakout. A strong 15-minute candle breaks out of the Asian range. Second is the confirmation. We need to wait for a second 15-minute candle to close outside of our range to confirm the breakout. Third, we have to wait for the price to retest our Asian range to give us a safe and high probability entry. So here's how you execute it step by step. During the London and New York sessions, you have to mark up your origin point, aka the Asian range. Once you see a 15-minute candle to break out of our Asian range, you do nothing. You wait for the second candle to close outside of our Asian range. This is your confirmation that the institutions are likely behind this move. Once you confirm the breakout, you have to check your charts every 15 to 30 minutes to wait actually for the price to retest the Asian range, because it's going to take some time before it reverses and goes back to retest the Asian range. So you need some time, you have to wait for the price to retest the Asian range. Once the price starts pulling back, all you need is to draw your Fib levels from the bottom of the Asian range to the high of the breakout, or vice versa. If the price broke to the downside, you draw your Fib levels from the high of the Asian range to the bottom of the breakout. Sometimes before the real breakout, price might have a sweep, a false breakout one side, and then have a real breakout to the other side. In that case, let's say the price swept the Asian low and then it went to the upside and broke to the upside. In this case, you're going to draw your Fib levels from the bottom of the fake out to the top of the breakout. Your Fib levels is going to be in this range. And for your entries, you will place your limit orders at the 60% and at the 70%. Your stop loss for the 60% entry is going to go below 80%, and for your entry on 70%, your stop loss is going to be to go below the 100% level. And for the targets, we will be aiming for 5R. The theory is great, but seeing these happen in action is what will make it click for you. So let's jump into the charts and I will show you exactly how this 3-step process looks like on a real trades. Okay folks, this is a real life examples of this strategy. First of all, that you have to understand, we are on a 15-minute time frame on Euro USD. These vertical lines identify the breaks of the day. Basically, this is when the new Tokyo session opens. So basically, you open the charts right before the London and New York sessions. Like sometimes it happens during the London session, sometimes it happens during the New York session. For me, it is convenient to trade the both sessions. So I open my charts right before the London session, and we have to draw the high and the low of the price action during the first 4 hours of the Tokyo session. For that, I use the Fib levels. By the way, you can copy my settings over here. Here are the settings. You see, it's just going to, and I've added this text over here. But in any way, as you can see over here, the price is breaking to the downside and retesting our Asian range. This is where we just need to get our Fib levels, draw it from the high to the low of the breakout, and let's apply it. And we are going to enter our trade at the golden zone. So basically, this is a secret that we teach inside of our mentorship program, but let me share it with you. Basically, you can enter on the golden zone, which is 60, 70, and 80% retracement levels. By the way, this is the settings for my Fib levels as well. What I would recommend for the beginner traders is to divide your trades. For example, you're risking 1%, so you have to risk 0.3% on each of 3 levels, on the 60%, on the 70%, and on the 80%. And the stop loss is going to go above this Asian high. Basically, with this way, you can aim for 5R, but sometimes the price can give like 10R trades as well. Let's cover a couple of more examples. Here's another example, and it is a little bit more interesting than the previous one. Let's draw the high and the low of the price action. Let's mark up our Asian range. First, as you can see over here, the price is breaking to the upside. We are getting the confirmed the breakout. But the most interesting part is that we are doing that before the London session. And by the way, this vertical green stripe represents the first 2 hours of the London session, and this pink stripe represents the first 2 hours of the New York session. So basically, the price is just doing some manipulation above the Asian high before the London session. And during the London session, the price is just ranging inside of the Asian range, and during and right before the New York session, we are breaking to the downside, and then price is going to retest our Asian range. Basically, what we do here is we draw our Fib levels from this high, from the sweep, from the high of the sweep to the bottom of the breakout, and then we are placing our trade at the 60% retracement level. And the stop loss for the 60% entry is going to go above 80%. And as you can see over here, the same, like with this trade, we can aim for 5R as well. And the 5R, the price gave us 5R only the next day. So basically the lesson that you need to take from this trade is that you don't take the trades that happen before the London session. So everything that happens after the London session is valid. And when you will be trading, when you will be drawing your fib levels, you have to do it not from the high of the Asian range, but from the high of the sweep that happened prior to the real breakout. So let's move further and just cover a couple of more examples. So here is our Asian range. This is Asian low. This is our Asian high. And as you can see over here, the price is breaking out to the upside during the London session, and it is retesting our Asian range during the New York session. For those who tell like I'm from US, I cannot trade this strategy. No, you can. We do have trades during the New York session as well. And by the way, guys, this is just one of the 4 methods that we trade. We do have OP method number 2, 3, 4. This one is called OP method number 1. So basically what we do, we draw our fib levels from the bottom to the upside, and we enter our trade at the 60%, and let's say this was our trade. It gave us 5R, but if you say that the price is almost at the 80%, we could have entered at the 80% as well, and this would have give us 5R trade as well. So doesn't matter, or you can just divide your trades into 3, one on the 60%, one on the 70%, and one on the 80%, and aim for 5R from the best case scenario trade. Let's cover one more example. This is more unusual example when we do have losses with this strategy as well. For example, what is happening here? The price is sweeping the Asian low, then we're having the breakout to the upside during the London session, and the price is retesting our Asian range during the London session, and we are getting stopped out here from one trade. But guys, we are breaking to the downside. As you can see over here, it is a confirmed breakout. One candle is breaking down, another candle confirming the breakout. So basically we can trade the OP method number 1, the breakout trade, to the downside from here. We have a successful breakout to the downside, the entry at the 60%, the stop loss goes above 80%, and we will be aiming for, yeah, in this case, guys, kind of the price didn't give us quite like 5R trade. So this trade, probably this would have ended up being the break-even trade, or like aiming for 4R is pretty good as well. So basically you can aim something around like 3 to 5R with this trading strategy. And why this strategy is so mechanical? Because you can trade the OP method number 1 only one time per one side. For example, we can trade the OP number 1 to the upside one time, and we can trade OP method number 1 to the downside one time, only and only. So basically, let's say we do have one like bad trade over here. The price broke to the upside. We will not be trading the second breakout. So basically, if you open the charts and if you see that the OP method number 1 already played out or failed to play it out, that means that you don't have to look at the charts anymore that day, at least for the OP method number 1 trade. So this is a beauty of OP methods that makes them 100% mechanical. Okay, let's cover this example and we can wrap it up. Okay guys, look, here's our Asian high, this is our Asian low, and over here the price is breaking out. We do have one full body candle that broke to the downside, one more candle closing outside of our Asian range. Basically what we do here is that we draw our fib levels from this high to this low, and we enter our trade. Like we enter our trade as usual at the 60% retracement
retracement level, the stop loss goes above the 80% retracement levels, and we will be aiming for 5 hours. But as I said, sometimes price can give us like 10-hour or like 15-hour trades as well. But this is more kind of like the exclusions. Like most of the times we are going to get 5-hour trades with this method.
So now you have a complete 3-step mechanical strategy to trade the high probability breakouts. This framework is designed to give you clarity and remove the need for you to be in front of the charts all day long. But the breakout model is just one tool to trade the trendy moves. On rangy, choppy, or some high volatility days, you need a completely different frameworks. Like the reversal model that we use to trade the liquidity grabs from the key levels, or the supply and demand models that we identify high probability intraday levels for the reversal. Mastering the complete system with 4 high probability setups that we trade, these are called the OP investing methods, is what I teach inside my mentorship program. It's the fastest way to become a complete trader and adapt to any market conditions and trade consistently. If you're ready to get started, just send me a direct message with the word ready on my Instagram or on my Telegram. All the links will be below the video. Me or my team will give you a complete information about the mentorship, and we will get started with you. But if you're not ready yet and you want to learn more about our OP investing methods, check out this video.